today what I'm going to talk about is a couple of questions that came to me when I was sitting here, right now, and basic trading mistakes that most people make when they are trading. The first thing is, as I said, we started these sessions. This is probably one of the last sessions. Probably we are heading into the end of the course. And the basics, I've already informed you about fundamentals, and then technicals, basic information, the kind of tools that I use for analyzing markets. And we're almost at the end of these sessions. This is the 9th session today, probably 1 or 2 more to go. So you would have to bear with me 2 days maximum most. So I will not be taking much of your time. So, but there are a couple of important points that I wanted to discuss with you. And today, basically, what I want to talk about is our trading rules and trading laws, trading strategies that we should employ in this market, and basic trading mistakes that we make. Okay. Now, there's also a story that I'll tell you. It's like it's not a story, but it is what basically has been taught in this market regarding a Wall Street trader. But I'll come to that later. Okay. So right now, the basic things, the mistakes that we make is, okay, we do not, when we plan something, whatever in life it is, that when you plan to do something in your life, whether you're a student, whether you're an investor, whether you're a wealth management, manager, what basic mistake is that we do not analyze or take the time out to put in the effort of analyzing that particular venture that we are about to move into. So this is the basic mistake that we do. So do your analysis, do your planning, and then if it falls under your, the feasibility, that it falls under your umbrella, that you can, withstand the highs and lows of, the business or whatever venture that you're going in, and you have your mental focus, you have control over, your emotions, and you have set a limit, only then you, go forward with your strategy, with your plan. But always have a strategy and a plan. That's the basic mistake that we do. We do not have a strategy, we do not have a plan, and then we say कि ऐ क्यों हो गया, ऐ तू कीता, नहीं मैं तो नहीं कीता, ऐ क्यों हो गया. तो it's a Chinese and Punjabi mixed sort of thing. तो फिर अक्सर ऐसे ही सवाल आपके दिमाग में आते हैं, और घर वाले अब्बा जी कहते हैं कि पुत्र की कीता है तू, मेरा सारा कुछ रोड़ देता है. तो कहना था अब्बा जी तुसीं भी ऐं कीता होएगा कभी किसी टाइम पे, तो मैं कर दी कि केड़ी बड़ी गल है. तो बट ठीक है, लेकिन वो the basic thing is कि always, coming back to these financial markets, I mean, why are they called financial markets? Because finance, everybody is concerned with finance. It's what makes the world go around. So it concerns every one of you. ठीक है? तो it affects your livelihood, your parents' livelihood, and you're sitting here because you're earning, because everything, the world roams around finances and economics. That's the basic reason why you're sitting here. So my first and foremost session that I said, okay, this, what I've taught you in the last sessions, this concerns you, this does concern you. बेहतर ये है कि मतलब कि wherever you can acquire knowledge, acquire it, learn it, and then move on forward in your life, because every knowledge that you acquire adds to your resume. So ये नहीं है कि आपको फजूल ही हमारा टाइम वेस्ट हो रहा है. इससे बेहतर था मैं बाहर जाके बिरयानी खाता या खाती, मौसम बड़ा अच्छा, पकौड़े ले लेती, चाय का कप पकड़ लेती हाथ में. तो but it is wherever you can get knowledge, get it. It adds to your CV, it adds to your overall character, and once you're sitting in an environment where there are a lot of discussions going on, and if somebody asks you about, if there is a discussion happening about the macroeconomics of the world, what's happening today, so you don't sit in that discussion and you have a dumbfounded look on your face. I have no idea what you're talking about. So if you keep with this attitude कि I don't want to learn, मुझे शौक नहीं है करने का या मेरे उस पे, then go ahead and keep living that life. आपको pretty soon you will find out that you become irrelevant. आप जिंदगी में लोगों की जिंदगियों से irrelevant हो जाएंगे. So knowledge improves your your skill levels, your talent, and it increases your worth. अगर आपने वैसे ही रहना है, worthless रहना है, then keep doing what you're doing. Laid back life, good, it's always good, but at the end of the day, what are the trading mistakes that we make? The trading mistake that we make is that when you have a certain amount to invest or trade in a market, we only trade according to that. Okay, this is the amount that I have, and then you place your stops or your risk levels in this market according to that portfolio. But the important thing is what the time that when you're entering into something, आप वो कहते हैं ना, strike when the iron is hot. Thank you very much. So your entry, your timing in anything, in success and to be a successful person, your timing counts. So in which business cycle you're entering, if you're investing in a stock market, or if you're investing in commodities and currencies and bonds or whatever, and or even in real estate or whatever ventures you're trying to get into, your business cycle depends on it. If it's a recession or anything, the markets have come down to its low, they are stabilizing, probably right, good idea, okay? Make a plan and go ahead with it. What basically mistake that we do, most traders do, is that when they place a stop and they say कि this is the amount, ये amount मैंने लगाई है और बस ये हो गया तो इससे ज़्यादा मैं नहीं दूंगी या market में नहीं दूंगी, and that is it. But do what, my point is, do what the market is trying to tell you. What is the the sentiment of the market? What actually the market is trying to tell you? Then place your stops or place your risks accordingly. Okay? The second thing is, we are emotional beings. Jazbati log. We don't have patience. We have lots of emotions. ठीक है, एक दफ़ा माँ ने 3 दफ़ा बाप ने कह दिया पानी का ग्लास लो, पानी का ग्लास लो, हर वक्त पानी का ग्लास मांगते रहते हैं. We lose the patience. अम्मी ने कह दिया बेटी आज ज़रा 2 रोटियां और बना दो, 5 बना दी मैंने, 2 और नहीं बना सकती. Patience. You don't have the patience, right? It's just an example. I'm just giving an example. So looking at the audience around here. So it's patience. The basic crux in life is patience. I mean, even our religion says, be patient, right? So you have to be patient. Okay? So God knows our nature, and He says, be patient, and you will, and keep pursuing the right path and be patient. So be patient. So patience is the key. And then you have to wait for your opportunity. Okay? You have to be very disciplined. In life, for example, I've told a million times, there are new faces on chairs right now. For boys especially, be disciplined. Whatever you try to do in life, be patient. Similarly, in this market, you have to be patient and you have to be disciplined. So you know how much to risk, and once that risk or your stop has taken out, then do not get into the market and overtrade or get angry over the fact I've lost this, I have to recover this right now. No, that doesn't happen in life. You have to wait, you have to reassess, go back to the drawing table, do your analysis again from top to bottom, retrospect what mistakes that you have made. Always, a person who builds character, they're always retrospecting. Retrospecting, an English word, write it down if you don't know what it is looking into yourself. मेरे में क्या खराबी है, मेरे में क्या skill है, क्या ability है, whatever job, whatever task that you're doing. Can I do this? Do I have the ability? Achha, what do I need to improve myself? Okay, I need to catch up. I need to acquire more skill, more knowledge, where I can get some reading done. If some dude in a red shirt standing in a room is telling me something, so I have to listen to him. It's like open up, clean the wax in my ears. Start listening to the guy. So So, it's like, you have to decide. But the first thing is decision. Decide. So, making the right decision, having the discipline, having the patience, analyzing the market, planning your strategy, what strategy you're going to implement. These are the most important things, be it in this financial market or be it in life. I mean, most of you, I can tell, I've got new faces in front of me, I can tell, you do not have an idea what are you going to do after 6 months from now, what major you're going to choose in life, what do you like or what do you don't like. Is this something that I said earlier, is that your father imposed on you to choose a career? Yeah, Papa ne kaha tha wo kar raha hu, wahi kar raha hu. Baki I don't give a shit. Okay? So, if you keep this up, then, you'll live a shit life. Repressing your, your talents, your whatever you want to do in life, and you will lead a shit life. And probably that leads to further shitty events. Express I'm sorry for these words, but to make it clear and make it more easier, there are no other choices of words that I have. So, so basically, is coming back to this, is planning, strategizing, discipline, keeping emotions out of it, your anger, your frustrations, your fear. A trader, when it comes, if you actually see a Wall Street trader, those guys are bloody ruthless. And they say, if you're 40 and 45 at a Wall Street, you're too bloody old. You will not find 40, 45-year-old traders on Wall Street, because it is not an easy job. If there are a couple of movies that I might recommend to you at the end of the session today that I want you to watch, and it will give you an idea what basically happens to a trader. There was Nick Leeson was the guy, a rogue trader. It's a true story, Nick Leeson. He's the one who brought down the Queen's Bank, the Barings Bank, UK's Baring Bank. He brought that bank down actually by trading in this financial market, literally. He put a wrong trade and he put the bank's money in that trade. As a true story, if you look up Nick Leeson, rogue trader, the book came out and then the movie came out. I want you to watch that. So what he did was he was betting on the Nikkei, which is the Japanese stock index, like the S&P 500 or KSE, Karachi KSE index, which is today, I think it went up to 130,000, something like that. So he was betting on the Japanese economy. So that went wrong, and he lost the bank's funds, huge. He went to jail for it. The Americans or the Europeans or the West, they can forgive you for murder, they can forgive you for rape, they can forgive you for all sorts of the capital crimes that are out there, but they will not forgive you when you lose money. You go to jail for 100 years or 80 years. Enron is one of them. They sent the CEO to jail for 80 years. He probably died in there. Then there's Bernie Maddox. These are the names that you might want to put that in your head and look them up. These are true stories. I'm not making these up, right? So they punish you for financial crimes, because to them, dollar is everything. You lose the money, you go away for a long time. So, because it is a capitalistic, exploitative system. And I think I did mention in the early lecture sessions that I will tell you about some days what about the Chinese model and the Western model, which is capitalistic model, and the Chinese modernization. Why is China in the future, which I believe China is the economy is going to be in the future, because they believe in that modernization. Okay, so I'll tell you about the Chinese 5 rules, what Chinese follow in Chinese modernization. Basically, growth and harmony. They brought up the people out of the poverty level through the urban and rural areas, their sources of income. They mashed that up, that everybody makes money in their economy, and and through growth through prosperity, growth through harmony, and they these are the few things that they, in modernization, that the Chinese are applying. Also, merit, meritocracy. They believe in merit, right? So China is the way to go right now. If you kids are ever want to go any place else, but Chinese, because they are way ahead, far ahead, and that GDP, their Chinese GDP, is definitely going to surpass the American GDP, right? So this is what I'm saying. I don't know what the rest of the world thinks, but that is the truth, and this will happen. So coming back to this, now if you can, there are certain rules that I'll now basically tell you about trading rules. Okay, first, about these financial markets, what I've learned over the years, what I've learned about these financial markets, okay, is it might sound crude to the ladies sitting here, but that is the truth. But that is how I treat this market. That is what this market is. This market is like a beautiful woman. आप कान खड़े हो जाएंगे. Woman? Say woman? Did I say woman? Okay. This market is like a beautiful woman with character. So if you treat it with respect, with dignity, it will respect you. But if you mistreat it, see, and mistreating in a way that you're not able to read the market properly. For example, woman or a person or a life partner, you're supposed to read their emotions, their mindset, and you're supposed to be respectful of that, isn't it? That is when the relationship, prospers. It goes up, it grows further, and you are rewarded. So the same thing is with this market. You treat it with respect. You treat it what the market is trying to tell you. You do not disrespect it. But if you disrespect this market, just like you disrespect women, it will, another crude word, it is what they say, the phrase is, it will bitch slap you. Like the bitch slap is this side. And it's going to bitch slap you. Loss, tuck. Loss, tuck. And another one, tuck. So ਕੀ ਹੋਇਆ ਸਰ $10,000 ਸਾਰਾ ਚਲਾ ਗਿਆ ਕੀ ਹੋਇਆ because the market started bitch slapping you because you didn't respect the market. You didn't treat it the way it should be treated. So these are the life lessons which literally, yet from the age of 21 when I started out in this market, I seriously learned from this business. It tells you a lot about life. This market tells you about life. It inculcates in you discipline. It makes you get rid of your emotions. You don't get emotions even when you go home and there's an argument and you sit like this. When everybody's going, bah, 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 because the market taught you to control your emotions. You learn to control your emotions, literally, seriously. You stop reacting. How do you react in this market? For example, if you have a loss, your initial reaction is, I want to recover it as soon as fast as possible. No. You wait. You wait for the opportunity. You study the market again. You analyze yourself, what mistakes you made, right? So you treat it with respect, like you treat a beautiful woman. So it has waves, it has perfect ratios, perfect proportion, like a beautiful woman. Okay, you can infer that any way you want. Anyway, so what are the fundamental trading rules? Okay. Number one is, as I said, have a trading plan. Have a plan. Okay? Have a trading plan. Now, what is a trading plan in this business? Is that you should know what is your risk tolerance, how much you can afford to lose. You should be able to analyze the trend. It is a bearish trend, it is a bullish trend. It's going up or it's going down, right? Then you have a strategy where your loss is going to be, what your profit is going to be. So have a plan. Second one is your risk. जिसमें आते हैं stop loss. Very important. Now, coming to these stop losses. Basically, most of these traders that I've seen all through my life, their stop loss hits when the whole account is washed. You see? That was my stop, my whole account, that was my stop. It's $10,000, $100,000, but that was my stop. No, it's not. It's not. You're not supposed to do that. You should have. If you have a $10,000 account, you should be risking, for example, 1 to 3%, 3% on the initial trade that you put up. So it's like you might have a 10%, of the whole amount. That if you lose 10% of that amount, that would be your stop loss in the whole account. But every trade that you put up, your loss should be 1 to 3%. So your stop loss. These stop losses are very important. जिंदगी में भी stop losses आते हैं. For example, in life, if you have an experience that you did something wrong and you do not want to repeat that mistake, but you survived and you made that mistake and you survived, so you've understood the risk of that certain incident or event that took place because of your stupidity or because of your ignorance, and that basically is your lesson. That was a stop loss hit for you. But as long as you learned something from that, always learn something from your experience. If you don't learn from your experience, well, then you're an idiot. Simple, pure and simple. You're a goddamn idiot. I don't know which way to put it. Always learn from your mistakes. If you're not learning, you are a goddamn idiot. Okay? So you can wear that t-shirt, I'm an idiot. Or you can tell your friend, make him stand next to you and have written that on his t-shirt, I'm with an idiot. So that's just pointing towards you. I'm standing with an idiot. So if you don't learn from your mistakes, you are an idiot. Pure and simple. Okay? So use stop losses, we talked about that. You're taking profits, what your profit levels, or where you're going to take your profit. You have to plan your trade, where basically are you going to exit. What mistakes that we make? We decide if something in life, it comes into profit and we say, that's it, I'm going to take it. That's it. Fine, if it works for you, good enough. But maybe the market is willing to give you more. Maybe life is going to give you more, is willing to give you more, but you cut it short. So when the universe is giving you something, accept it with full hands. Take the full ride. What I did, one of my clients, he's going to America, he's in America right now. We used to, when we had the opportunity and we were on the right side of the market, we called it make a killing. Make a killing. Go for it. That is the time when the market is offering you, when life is really offering you, here, take it. I'm giving it to you freely. You've been a good boy. You treated me with respect. You followed all the rules. You followed all your planning strategy. You waited. You were disciplined, and I'm giving you this. Then that is the time when you make a killing. You go for it. It's the phrase, the make a killing in this market is not actually when you go in start killing someone. No, it's make a killing in this market means that you take the full ride all the way what's offering you. Where you're getting off making $100, but the market is saying, I'm going to give you $10,000. I'm going to give you $20,000. So go for it. Make a killing. So plan your profits. Have a set target for your profit. We can calculate, looking at these price actions that I've taught you in the previous sessions, how we calculate profit targets, and I'll tell it to you again today on your platforms. So you can make exactly where you're going to exit, how much you're going to make. So there are strategies like, if you've planned your trade and you have a certain stop level and the market starts to retrace or come down, which is the second wave and the fourth wave. The newbies won't understand this, but I did tell you about the second and fourth wave, what these wave counts are. If they're retracing, if there's a correction, if the market is coming back down, so we'd figure out, the market is retracing. Maximum, the market can come down to this level, and what you can do is you were, impetuous, that you placed your trade, not fully planned, but, 70, 80%, 60%, you were sure that you've analyzed the market as the basic trend. The trend is your friend theory, that the trend is your friend, the market's going to go up. You placed your trade impetuously, doesn't matter, but it was with in the right direction. What you can do is that you can figure out how far this fourth or second wave can go down. And then if the market is coming down, what traders use is a strategy called averaging. Basically what happens is, for example, you have a $300 stop loss. Your profit should be in that trade, if you're playing a 300, should be multiplied by 300 by 3. $900. So your profit target should be at least $900. But you have to be vigilant, because if there is a data or a news coming out, for example, you have the US numbers. Why does this market look at the US numbers more closely? Because, as I've been saying earlier, the US is a superpower. Everything is traded in dollars. And when there's an old saying, there's a saying, this is an important one, you'll hear it in these markets. When America sneezes, the whole world catches a cold. Not true. When it sneezes, the whole world catches a cold. So that is basically true, because most of the technology, most of the tech companies, most of the growth, most of the demand, most of the consumers, they're in the US. And also the US dollar is the reserve currency of the world, and everybody wants to make money in dollars, because every bank in the world has to have US dollars as reserves. Similarly our state bank, and every time you hear it, we surpassed $20 billion our reserves, right? Oh shit. Okay. There is, okay, I'll just start, because we can't do that. There is a strategy called, when the market is coming down, there's a strategy called averaging. Is that you have your stop loss, and you have your perfect stop loss, what the market is telling you, not what you want a stop loss to be. What happens that one fine day is that when we wake up in the morning, we say, today I'm going to buy only, I'm going to sell only. No, you've already planned it in your head what you're going to do, but you're not planning it according to what the market is telling you, if you understand what I'm saying. So you have to study the market, look at the market, what the market is telling you. Is it a buy today? Is it a sell today? Or is it like, hold on, don't do anything today? Or is it one of these 3 days? So you have to tell what the market is telling you. There are days in this market, yes, when I tell people, I'm sorry, I'm not trading because I'm confused. I don't know what is going on right now. Probably that is the fourth wave, and probably the market is waiting for some data to come out, or probably a geopolitical event, what the market is looking at. Things are confusing. Overall, investors, people do get confused, because this market moves on human psyche, these price actions, all these traits, fear, greed, avarice, panic, everything is in this market, because it is part of a human psyche, and these emotions are in the market. So this market tells you. So when it tells you to stand aside, you stand aside. This is called respect in the market. When it tells you to enter in this direction, you study that and you enter in that direction. When the market is telling you stand aside, do not do anything, then please do not do anything, right? शेर का बच्चा बनने की ज़रूरत नहीं है उस वक्त, और मैं छलांग मार दूंगा तो शेर का बच्चा गवाएगा ही, अपनी जान भी गवाएगा. Exactly. So seriously, I've seen people in this market, believe me, especially in margin trading and investments in the stock markets, that during the 1933 US Depression, the Great Depression they call it, people literally, brokers, if you study history, they jumped out of their 7-story, their buildings, and they killed themselves. They had lost so much money. Even in Pakistan, in the stock exchange, when it crashed, people literally went onto the stock exchange and they started breaking the windows of the stock exchange. And people do kill themselves. When you lose your shirt, you lose everything. So you have to be, know your limit, be very careful, and then trade. This is not an easy business. As I said, if you're 40 years old on Wall Street, you're a trader, you're too damn old. You're out of here, buddy. Be a consultant or anything, whatever. But you're not a trader anymore, because with time you lose your instincts. right? Once you lose your instincts, game over. As I said in one session, what was three elements that are very, very important to human intellect: instincts, imagination, and curiosity. They start fading with age. Your instincts starts fading with age. Your imagination, just shrinks. Creativity, no more. All right? Curiosity, you don't give a damn anymore. I'm cool, laid back. 40 years, 50 years, I'm laid back. I don't give a damn. It's like the stage that I'm in right now. I don't give a damn. So I'm at a give no damn stage right now. The strategy that I was talking about is that you start averaging until you've planned your trade. This is where your exit is, and you average. And once the market goes up, your trades, your anchor trade, the more bottommost trade comes into profit. Then the trade above that comes into profit, and you start making money when it goes up. The other thing is, when the market is trending up and you've got your initial trade and it's making money, you start adding on to your positions, your profitable positions. That is called pyramiding. You start adding to your position. Over here, you've bought it, it's making money, then it goes up, and then again you add another one, and then again you add the third one, then a fourth one. This is pyramiding. You start adding to your trades. These are trades. That is when you make a killing. When you have the balls, when you have the guts, and you've understood where the market might retrace, come down a bit, and then when you start adding your pyramiding, that is when actually you're on the way to make a killing in the market. That's what I meant by making a killing, right? So these are a few basic strategies that you can look at. Always stick to your plan. Do not overtrade. Overtrade means once you have planned your trade and done a trade, do not overexpose your account margin, your portfolio. Do not overexpose it. Overexposure means that you're putting a lot more into a trade where the market is already very risky. You're increasing your risk exposure. So what happens? You call that overtrading. And overtrading, if the market goes in a different direction, if the market goes down or it goes contrary to your trade, then you can lose a lot if you overtrade. Follow the trend. As I said, the trend is always your friend, and always the most important thing is every trade that you put, every market event analysis, keep your eyes on what's happening. इसमें ये आसान चीज़ नहीं है कि people often forget कि we have a very narrow spectrum when we try to analyze things. I mean, for example, I'll give you an example. For example, if you look at something very closely and keep concentrating on it, you keep your one angle looking at it, whatever it may be in life. I mean, your mind is set on that angle, that frame. Now, once you change your perspective, your position on something, okay, this could happen. If I saw it from this angle, if I studied this according to this data, according to this historical fact, then probably that could also happen. So you're positioning yourself differently. You're changing your perspective is broadening. It's not skewed. It's not narrowed. But on a broader spectrum, you're looking at everything that you're looking at it. And then you do a perfect analysis. For example, I'll give you an example. This is a basic, true experience that I was working for a firm prior to Ukraine-Russia war, right? I was working at a brokerage firm, consulting for clients. And to my customers, I warned them in December, prior to Ukraine-Russia war, I said an event is going to take place. I didn't have a crystal ball. No. Okay, very good. Okay. I did not have a crystal ball or something. But I was studying the market on a broad spectrum basis. What I was looking at? Okay, the most important thing, what happened with the Iran-Israel war? Oil prices jumped up, right? Okay, we all know that recently. At that time, what happened? I was not only looking at the oil price, okay, there was something happening. It started to go up a bit. Then I started looking at, if I had a broader vision, what I was looking at is, apart from that commodity oil, which is an essential commodity, I looked at what you call, I was looking at the stock market, yes, of course. How is the US stock market or global stocks all around the world? What is happening with them? But then I picked out a sector and I started looking at it. It is what you call, what they call war stocks. These war stocks are basically Lockheed Martin, Raytheon, Grumman, Northrop Grumman. These stocks are called, there are a couple of more, these stocks are called war stocks. These are big weapon producing corporations in America and West, in Europe. I started looking at them. And what was happening? If the rest of the market was going down, utility corporations or tech industry or whatever, the rest of the market was going down, but the prices of these stocks of these corporations were going up. Because that told me somebody's purchasing a lot of weaponry. And if someone is purchasing a lot of weaponry, they're producing a lot of weapons, and they're producing a lot of profits for their shareholders, these corporations, something is going to happen. A war is going to happen. And I predicted in December, pretty soon you will see a war someplace. And lo and behold, in February, when Mr. Imran Khan was there in Russia, bang, Putin attacks Ukraine. This is what I'm talking about. Now this is what you have to basically, and people said, how did you know? Answer, tumhe kaise pata chala? I said, it was there. The market, the numbers don't lie, the markets don't lie. And believe you me, the markets don't lie. It always tells you what is going to happen. And that's what happened. So, my point, a broader vision. Look at all sectors, look at everything, what's happening. The rhetoric was building, prior to Russia-Ukraine war. NATO and everybody, the Americans, Anthony Blinken, and they wanted a war. So all these weapons are built not for, storing them in warehouses. They're built to be used to kill people. So what are they going to do? They're going to create a war. Wars are created. Believe you me, if that's information for you, well, if you heard it today, too late, but that is the truth. War is created to justify the building up of this, these weaponries, money and everything. Wars are created. Money has been the basic reason of all turmoil that you see. Money and power. Even in Makkah. What did Prophet Muhammad sallallahu alaihi wasallam, what was he against? Why did the Quraysh and everybody oppose him? Abu Sufyan and all these, why did they oppose him? Any reason? Deendar bache, hijab pehne hue. Anybody, raise your hand up, anybody. What was it about? What was it? No, kuffar and that? Muslim? Power and trade. Money. Because all those people, when they came to Makkah, they came with their idols. And they came with their idols, they placed them inside the Kaaba, and all with that, in that guise, they traded in the bazaars of Makkah. It was money. So the Prophet Muhammad said, you don't need that. These idols are nothing. There's only one God. He said, if he's saying it's one God, and what about that money, that revenue comes into Makkah when all these people bring their idols, their totems, their idols, and they place them into Makkah and they trade in our bazaars and we trade with them. We make connections, We make connections, trading partners. What is he doing? We're going to lose a lot of money. suspense music. Thank you. Gives more effect. Okay. So every war in history, it has a motive. So this is how you would have to, you should look at when you're studying something. Right? So always keep, increasing your knowledge, keep reading, get books, magazines. I'm an old-fashioned guy. I still read books, as I said earlier. Read books. Get a good magazine. Knowledge, anything that adds to your knowledge. Urdu, English, whatever. Pick it up, read it. Learn a language. Very important. I tell my kids, I've been telling them for years and years, learn a language. Chinese, Japanese, Arabic, whatever. Learn a language. Go out and see the world. Interact. Increase your worth. Do something, but just don't sit on your ass and twiddle your thumbs. Do something. Or get angry at the system. What's going on? Why is this not happening? What do I have to do to make a change? Be the change. Not let the change affect you. Okay? So coming back to these markets. Now basically I'll go on to your screens and I'll tell you the basic revision that we'll do, what these wave counts are, and I'll come to your screens and I'll show it to you. The retracement levels, how much further the market can go. You can put up any graph on your screen. You can put up the oil market, you can oil graph on your screen. You can put up gold, you can put up BNB, you can put up Bitcoin, whatever. We will do that analysis right here in front of you. Okay? So open up your screens on investing.com. And you can get a daily chart. I think this is a daily chart. This is a daily chart in gold. Now, if at least I'm doing something, you guys, I'm talking to you guys on the screen. Those are saying, oh, this is not the pattern that is forming, but at least I'm using my imagination, which I'm basically telling people to use their imagination and their curiosity. So that leads to the fact that if this is gold right now on the dailies, and there's probably this sort of a triangle, could be a triangle, could be a pennant, could be an ascending triangle, but anyway, there should be 5 legs to this. This 1, right? 2, 3, 4. It will go up now. On this move up, if it goes up to 3450, 3460 area, and then it comes down, fifth, comes down one more time to somewhere around, this is CFD gold. I think this is the, yeah. So it comes down to somewhere around, again, on a fifth leg on a move down, comes down to 3314, 3320 area, and then it sticks, it moves up, back up towards, and probably towards 3800 or 3700. So you heard it right here from me. So this basically could be a scenario. And gold for now, it is, to me, it is still bullish, and probability of going up to 3800 somewhere near to that level. So this is one analysis that we can do. Okay, this guy has opened up a BNB chart. This is traded on Binance. Everything that can be quantified, and that over a time frame, it has these charts and price patterns. It will form these patterns, and the same the studies that I've told you, the wave count, the Fibonacci's, the ratios, these candlesticks. If you can apply these studies on anything that you do. Now, for example, let's see, this is BNB, and right now it is bullish, right? Definitely, it's an uptrend. For example, there is almost a beautiful U here, and it comes down. These are the 3 lows that it held, and then it moved up from here. So if it goes up from here, right now where it is at the moment. Now, if we take this move from here, that all this correction ended up here, A, B, and C, it ended, and now the new move, it has started from here. Then if we start the wave come from here, right? 1, A, B, C, 2, this is 3, and the 4th one has come there, which is 50% retracement Fibonacci level, and then this 4th should not go below, which is the rule of wave theory. It should not go below this wave 2 low, right? It should not overlap that. So it did. It stopped perfectly right here, and it started to move up again. So this is BNB and a cryptocurrency. So, and look at it, it's moving up now. So even if you bought it here, 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 or here, your stop has to be below the low of the second, right? Because it's not going to breach this second wave. The fourth wave is not going to overlap or breach the second wave, and the market will continue higher. That's the basic rule of wave theory. And you see this market moving up. Now, it's gone bullish again. Probability of testing 761 or 750 on BNB is very much possible.